Hi, questions from Ahmad. What do you think about today's news? Maybe you can be more specific on what news you're talking about. But of course, in today's webinar, we'll be focused more on the Fed's interest rate decision later. Yes, we'll talk more about it and also the relationship with the dollar index, the strength of the dollar, and also with others pairing. Hi, Lalu. Hello. We will probably start in a few minutes, so stay tuned. We'll just wait for more participants to join us. And also, if you have any thoughts with regarding the markets later, if you are trading on the news, you also feel free to type and then just share and discuss amongst us. What you guys think about the gold price direction? You guys think that it will reclaim at above 2000s or it will continue to drop? So yes, we have the first thought of the day from Ahmad. So he thinks that gold gonna reach higher high. Oh, but we have a different opinion from Matthew. I think gold will be going down today. It fails to break 1970 yesterday as we got weekly resistance touching the MACD. Yes, it's a very interesting argument from Matthew. From Barry Jean Lewis, gold will resume over 2000. That could be also possible. From Ahmad, US dollar is losing its power. Okay, very interesting. We will definitely discuss on the US dollar definitely later. Okay. And also I will give my thought, and then yeah, you can have like a different view, different analysis than mine. But yeah, we just can we can grow together, we learn together. So I might see recessions in this period. Yeah. Okay. So without further ado, let's get started. So before we start, let me read out the disclaimer for today's event. Okay, today's Market Insight webinar is intended for educational and informational purposes only, and participants shall not take it as financial or investment advice nor a trading signal. The accuracy and reliability of the information provided cannot be guaranteed. Pure Prime and I hosting these sessions are not liable for any losses or damages resulting from the use of the information presented today. Participants are responsible for independently verifying information and considering their own financial goals and risk tolerance. Okay, this is the disclaimer for today. So let's get started. Obviously, like I said earlier today, because we have our webinar today is because we have the FOMC meeting and also the Federal Reserve interest rate decision that's going to release later. And also we'll, discuss the potential direction of the dollar index, as well as we can discuss the weekly outlook for the gold prices, oil prices, And if we after we have time, we can also discuss on the BTC price movement as well, because we know recently BTC have a big fluctuation, and I think a lot of people here are also lured to the crypto markets lately. Yeah. So these are the agenda. Okay, and then lastly, we also I have also highlighted several key economic calendars event until next week. So maybe you can also note it down, and you can keep an eye on it. Okay, first, the Fed's monetary policy outlook. So we'll discuss on what's the Federal Reserve going to do next. Okay, so this is the the last time November interest rate decision from the Federal Reserve. So they maintain their previous interest rate level, which is at 5.25% to 5.5%. So no rate hike, no rate cut from the Federal Reserve, and it is also widely in line with the market expectation. And also we know the next interest rate decision will happen today, the 30th of December. And if you look at this number below, this is from the CME FedWatch tool. So according to this polling, and market also again widely believe that the Federal Reserve will not going to increase further the interest rate, nor going to cut the interest rate. So 98.2%. This is what I checked before I start this webinar. Okay. So this you can take it as yes, 0%. There's not going nothing going to change. But why it is still important for me, I would say, what we're going to focus is not the numbers that's coming out later after the Federal Reserve announced their interest rate decision. But what is more important, I would say, is the Federal Reserve Chairman Jerome Powell. So what he says later will be more impactful or more important to the market, or the impact will be very, very direct to the strength of the dollar. And yep, this is some of the key economic data regarding the US economic that unveiled few days ago. Firstly, we know that the CPI that was just freshly released was kept at 3.1%. This is in line with the market forecasted number. And yeah, but we know that the Federal Reserve favorable inflation rate is at 2%. So of course we know it has like dropped from nearly double digit, I think 8 or 9% early of the year, and it went down all the way to 3%, a little bit more than 3% now. But of course, there's still ways to go. There's still a distance to reach their favorable inflation rate, which is at 2%. But also at the same time, we also have to take into account of the economic performance in the US. So if you guys can remember, last Friday, the non-farm payroll came better than the market expected. If I'm not mistaken, it was like 199,000, and yeah, it's higher than what the market expect, which is at 180K. So from the start, you can tell the job markets in the US is still robust. So it means that a lot of people are getting hired. A lot of businesses are actually hiring. It means that the economy in general is still expanding. So as a result, there's potentially cause the inflation to go higher. So this is one of the factors that we can take into account. But of course, we look at the latest CPI reading. The CPI reading came down from 3.2% to the current one, 3.1%. This was the November CPI. Okay, of course, we have like a 0.1% decline, but it's still well above what the Federal Reserve want to achieve. Okay, so you can actually anticipate the Jerome Powell to have a rather hawkish tone later when he give his speech, because after the interest rate decision announced, he will address several things. So what we want to see is whether or not he will address, because at the moment, at the same time, markets also widely believe that next year, as early as the first quarter of 2024, Federal Reserve have chance to start cutting rates. So when this is actually happen, it will have, harm the strength of the dollar. It will definitely hammer the strength of the dollar, and you can expect the DXY, the dollar index, to plunge from the current level. Current level is about at 103.6, so it can easily go to like 100 or go beyond, or I mean below that. Okay, and we all know previously the PCE reading from the US, as also retail sales and the latest CPI all shows below than expected number. So from the side, you can see it's easing. If you look at the unemployment rate that also released last Friday, it kept at 3.7%. So this is also a good sign, because what the market doesn't want to see if they go to 3.9% or further, because this one usually shows that US economy will potentially go to a recession. So luckily it was still at 3.7%. So you can see since last Friday, the dollar index was doing reasonably well. Of course, it's a little bit of sideways because it's like ahead of this very crucial interest rate decision announcement. That's why you can see the fluctuation of the dollar index was kind of minimal if you compare to the previous trend. Okay, so just share with you guys this DXY chart. Okay, I draw this line is because this for me it will be like a pivotal level for the dollar index, which is at 104, which is for me a psychological level as well. Of course, previously it touches 2 times like a false breakup. But what I want you guys to notice is you can notice that they have a higher low. What does this mean? I don't know for you guys, but for me, I would say this is kind of like a bullish bias signal. Okay, I remember, I think just now some of you guys say they have a very bearish bias view on the dollar strength because of like signs of recessions, signs like the economic performance is not doing well. But if you take away the fundamental analysis, but just look at the chart and then you apply technical analysis, for me, I just see a lower high. I mean higher low, sorry. And yeah, and also at the same time it has this ascending triangle pattern for me. I'm not sure if you guys are looking at the same pattern. Of course, if you have like a opposite opinion or view, is you can also type it up and then we can discuss together. Okay, this is what what I see. So I really expect later on after the FOMC interest rate decision came out, and then when the Jerome Powell addressed thing, and it will stimulate the dollar strength to go beyond 104. Okay. And if this happen, I will trade accordingly as well to others pairing and also towards gold. So I think just now also some of you guys have like a mixed opinion regarding the gold price, right? Some of you guys think it will reclaim to above 2000s, and then some of you guys predict that it will continue to slide. I cannot like 100% guarantee what's going to happen next, but of course I will have my thought, and then we will discuss it later. Okay. So this is what I think. So I think later my best guess is I think that Jerome Powell will give a slightly, relatively more hawkish tone than before, says that the economy is still relatively healthy, and then if you refer back to the non-farm payroll, refer back to the unemployment rate, it's like potentially will push the December inflation rate higher, and also maybe will trigger the retail sales to go high, because at the same time we know that we are now entering into this festive season, so we are going to celebrate Christmas very, very soon. So potentially the retail sales were going to pick up, and this is what I think one of the factor to leads the Federal Reserve to consider at least another rate hike, maybe in January, we don't know, and or if not, they will just stay stay at the current level, I mean this elevated interest rate level for a longer period. This could be possibly happen. Okay. Yep, this is my view on the dollar index also, and also my guesses on what Jerome Powell is going to do later. And moving on, we will focus on the gold prices. So these are some of the factor that I came up with that could possibly have an impact on the gold prices. First one, I said just now, potentially, this is like what the market says, potentially the Federal Reserve going to cut the rates in the first quarter. That's why you can see since the mid of November or early November, why the dollar suddenly plunged so drastically. This is one of the key reason why. Is because markets start to believe, and it's more convincing to say that the Federal Reserve might have a chance to cut the interest rate in first quarter of 2022, because of course, obviously, if you compare to the previous inflation rate, they have done a great job. So they have been like taming the inflation rate from 8 to 9% until the current 3.1%. If you take the CPI reading as the inflation gauge, okay, to 3.1%. So yeah, so people like start to spreading around this story. That's why it leads to the dollar to plunge so much. But of course, the second factor we also cannot be omitted, which is the Hamas and Israel war. And of course, now I think the major, like the global major media has already shifted their focus, like CNN, like BBC, like a lot of like notable media, they have like shifted this focus from the Middle East war to other thing. But I just checked, I think the development of the war is still is intensified, and then there's like a bombing happen in the Red Sea zone as well. So people there are still suffering. So we don't know whether or not this thing will still escalated or intensified to another level. So if this happen, and if the news going to report it, they could potentially drive or push the gold price back to 2000, okay, which is also in line with the first factor. So if we really think that Federal Reserve going to start cutting the interest rate in next year, it will hammer the dollar strength lower. So, and we know the gold price and the dollar index will have like an inverse relationship. So when you see the dollar is weakening, you can expect the gold price to trade higher and higher. Okay, and if of course, touch wood, we don't want this thing to happen. But if the war in the Middle East really break out, if it become worse, and it will also potentially drive the gold price higher. And the third thing is the China economy. So from the previous economic data since November, it has been disappointing. Okay, I can just show you this. Yep. So this is like a monthly economic data from China. So overall, if you look at, most importantly, if you focus on those PMI reading, you can see that in general, they have been kept at below 50, or even if they touch 50, it will just still came short than the forecasted reading as well as the previous reading. So in general, I would say they are still struggling. They haven't back to their prime time like in a pre-pandemic period. So, and also at the same time, I think if you guys can remember, a few weeks ago, Moody's, one of the biggest credit rating agency, has just cut the credit rating on China, on their credit, as well as from the banking sector. So not just banking sector, one thing is they're facing a problem. They're still struggling with the property sector as well. So all these things that could potentially hinder the China economy. So this is like a bullish factor for the gold price as well. if the China economy is not doing well, and we know China is the second largest economy in the world, so if they are not doing well, people are very uncertain with what's going to happen next in 2024, where the economic outlook is unpredictable. People will tend to hold these safe haven assets. People might keen to hold gold rather than other assets like equities, like maybe crypto, I don't know. Yeah. And yeah, these are the potential factors that I believe that might have an impact on the gold prices. But unfortunately, for me, my previous analysis, I thought gold price will plunge to below 2000, and I think it will quickly rebound from there. But unfortunately, if you look at the gold price like continue to plunge, like even lower than 1980, which is I expect it to at least will have a rebound from there. But it just didn't happen. So if I use this Fibonacci retracement level to draw a line and to give me a reference, so when it does break, firmly below this 61.8% of the Fibonacci retracement level, which is at 1991, if you want 1990, yeah, I really start to change my thought. So I think now at the moment, gold price has turned to be bearish. So it is a very solid trend reversal for the gold price. Okay. So again, speaking from the hindsight, after this very, very long upper week after it touched its record high, all-time high, I should have known there's like a trend reversal signal already, especially after that it followed by 4 very solid bearish candlestick. So but I have like a own bias. I thought maybe just like want to wash away the long position like holder, and then will have a technical rebound, but it just didn't happen. Yeah, but and then after that, especially after it broke below 61.8%, it's now very convincing for me that the gold price will go down. I mean, continue to go down, at least at the moment. This is what I see. Okay. And also, again, just now, it is also in line with my analysis earlier. So I actually expecting a breakout for the dollar index. So I have this higher low price pattern. I have this ascending triangle pattern. So if it does break above 104 for the dollar index, it will be very convincing for me to open a short position, short term wise, to trade on the gold. Okay, this is my own thoughts, but you don't take it as trading advice. So you have to make your own decision. Okay, you also can discuss with your peers, whatever. Okay, and be responsible. And then of course at the moment you have to do a very, very smart risk management. Okay, this is how you can protect your fund, your capital. So if you guys also if you are interested in this kind of topic, you also can raise it up to your personal account manager. So maybe we can prepare for you guys, and then we will come with another webinar talking about this, talking about risk management. Okay. Jump back to the topic. So yeah, this is my analysis on the gold prices. And moving on for the oil prices. Oil prices is a little bit harder to tell because the movement of the oil prices lately is also go against of what my thoughts. Okay. Okay. Also, I also list out a few factors that could potentially affect the oil prices. So we'll go through one by one. First is the OPEC plus supply cuts. So if you guys can remember, I think lesser than a month ago, the OPEC had a meeting. So after the meeting, they say that they will extend the periods for oil supply cuts to 2024. So they actually going to start in January. But what that disappoint the market was this is they come in with the voluntary basis. It means that they allocates the quotas for all the OPEC member, but it just you can do it or you can just forget about it. Okay, but what I want to argue here is we know a lot of the OPEC member, they rely a lot on the oil exports. So they really need to sell the oil to make profits to cover their government spending. So I would say they definitely don't want to see the oil prices to go lower than $80 or even $70 because now it's kept below at $70 for WTI. So definitely they doesn't want to see it. And I refer back to the Citibank's analyst. So they say Saudi Arabia actually wants the oil price to stay or maintain at $100 per barrel. This is their favorable oil price for them. So I don't think in a short time they can go to this level, 100. So, but for me, I think they will at least try their best, put in all the effort, try to at least push the oil prices to at least maintain at above $80. This is my own view. Okay, I think they want to do so. And okay, the next one, bullish factor for oil prices will be the vessel attacks in the Red Sea, which is I also said earlier. And the attack on the vessel, the vessel actually carrying oil, so it does at the same time have a very short-term impact on the oil supply. But when this news came out, it doesn't really impact on the oil prices. So I think now at the moment, market is really focused on the longer term demand and supply outlook. So these like small events, small things is like market doesn't care, market doesn't buy it. And the next one is also very, just freshly released, which is the EIA report. The US EIA output is going to reach a record high in this year. So their previous record high was in 2019. So after they did the report and then they see that they forecast that in 2023, they're going to go even higher than the previous record high. And what is worse is they predicted that next year they will even produce more oil, export more oil. I cannot remember the exact figure, but it's like higher than in 2023. So this means that the oil supply is actually higher. And also from South of America, from Brazil. Brazil is also one of the biggest oil exporter in the world. They are increasing their oil supply as well at the meantime. Okay. And also we all know that always Saudi Arabia and Russia there has been cutting the oil supply. But from people who know this matter, they see that Russia actually supply more oil than what they promised. So for example, they just allowed to supply like 500,000 barrels per day, but actually they secretly supply more than that. So this leads to the supply of the oil actually a lot more than what the markets want. And also from the Citibank's analysts, so they think in next year the global market will face a surplus of roughly 1 million barrel a day of the oil next year. Okay, this is like a lot. You have a surplus. It means you have like an extra 1 million barrel of oil next year. This will definitely. This is like a very very bad news. Very very bad analysis report from the Citibank. And yeah, and against the China economy is also one of the hurdles for the oil prices. Because we know China is one biggest oil importer in the world. So yep. And if China economy is not doing well, if their PMI reading is still, plus minus at 50 level, means that their economy is not expanding, they will just need less oil. So this is also one of the biggest factor that harm the oil demand outlook next year. So in general, I would say if if like in a free market, the oil price will just gradually go lower and lower. But of course, one of the biggest factor also is the OPEC. OPEC doesn't want to see this kind of price. They doesn't want to sell the oil at like $60 or $50. They definitely want to, manipulate, want to intervene in the markets, try to support the oil price to at least above 80. I would say this is like a favorable price for the OPEC members, because if not, I think they were just making losses or earn a lot lesser to cover their government spending. Okay. Okay. Then this is the oil prices chart, and also if you look at here, this is one very, very important support level for me. Okay, I draw this and then I thought this is like the last support line that I drew early on when I do the analysis. And I never really thought that the oil prices will go beyond or go below this. And I actually really happy to see a rebound from here. And then I thought, oh, maybe they will have a strong trend reversal for the oil price. Yep. But this came with another very, very big, long, solid bearish candlestick and break below this critical support level for the oil price. So yeah, I really have a very, very strong bearish bias now for the oil prices. Yeah. And yeah, maybe now at the moment we'll have a rebound, but yeah, touch this, then support, now resistance level, and continue to plunge if the OPEC not going to intervene. And I think they haven't announced any further meeting to see that if they have any other measures to help the oil prices. So still no news from the OPEC. Yeah, but if just go in general, I think with free market, I think oil prices will continue to plunge. But another factor is, what if in next year all the major central banks, like Federal Reserve, like Bank of England, like European Central Bank, like Reserve Bank of Australia, Reserve Bank of New Zealand, all these major bank, they will if they start cutting rate, what they will do, they will try to encourage more economic activity, because they are done with taming the inflation. So if they're doing so next year, this is one very, very important factor that drive the oil price to rebound, to go back to their prime time. Okay, but we don't know yet, because now at the moment still no any major central banks coming out to say they are confident they are going to cut the interest rate next year. No. But of course, maybe later on, Jerome Powell will be the first one to say so. So yeah, we just stay tuned. And moving on, let's dive into the crypto markets, especially BTC. So BTC has been like the hype in the markets. The movement is so very, very strong. And if you compare to the gold price, it is like stronger than the gold price. Why? When BTC traded to the highest level since early 2022, but it just stayed firmly there. And of course, it does slip on Monday. But for gold price, I think you guys know it touches the highest level, but it just came down drastically, and then now even dropped below at 2000 level. This is like very, very crazy. So yep, let's discuss a bit on the Bitcoin. So first thing, according to the Coinalyze, BTC open interest reached the highest level, which is like 12.4 billion in December, which is I think 1 or 2 weeks ago. But of course, after it plunged now, because it plunged to below 42,000, it does kill some of the long position trader. So I think now at the moment, the open interest is capped at above 11 billion. It's still a lot. So you can expect a lot of participants in the market, a lot of institutional traders are in the markets. That's why they are the one that's supporting the BTC prices. And the next one is BTC Whales. So BTC Whales is those addresses, those wallets that own a big amount of BTC. So they call it a BTC whale. They have been accumulating significant amount of BTC since I think September or October. So you imagine if they are the one that holding a lot of BTC, they really don't want to see the BTC prices to go back to the price that when they start buying. So which is at around 30 plus, like below 36,000. I think in early November, BTC was traded at 36,000 or somewhere around there. Okay, so they are also the one that like keep buying, shows the demand, have the push the demand for BTC. That's why pushes the BTC prices to this current level. Okay, and then the third one, it would also like previously serve as the biggest catalyst for the BTC to trade higher and higher, which is the spot BTC ETF. And because we are now reaching the deadline, I think US SEC have a deadline on early January next year to give the decision whether or not they are allowed those big institution on Wall Street to actually launch their spot BTC ETF. If they do so, those institutions, they're going to have to purchase a lot of BTC. This also will push the BTC to a higher level. I would say definitely very, very easy to go beyond 50K. Yeah, if this approved, if this application got approved by the US SEC. Okay. And also next thing is the BTC halving. So BTC halving is counting down. So no one knows the exact date, but market believe that it will happen in March or April. So when halving happen, you can expect the BTC supply halving, like lesser. So this is also one of the bullish factor for the BTC prices. Okay. And also I just got a news, but this is like a not 100% confirmed news. Is the news from the CFTC, which is the US Commodity Futures Trading Commission. The chief of this institution says that he suggests that CZ, the Binance CEO, he have to serve some time in the prison. So the chief of CFTC actually advised the authority to jail Binance CEO. So this is just still rumors. This is not a confirmed case. But if this really happened, it will really rattle the BTC market. I mean the crypto market. Yeah, it will harm the BTC prices badly, I would say. And of course, like the sentiments at like a very short term wise, if this news really come true. Okay. Yeah, this is just like one of the fun fact of the day lah. And moving on, I'll just discuss some of the key economic calendar with you guys, because today later on we will have a very crucial Federal Reserve interest rate decision, which will like a few hours later. But tomorrow we also have a lot of measures. Central banks, they will announce their interest rate decision, which is one of it will be the Switzerland. If you guys are keen to trade on the Swiss franc, pay attention on it. And moving on, more importantly, we will have the ECB, European Central Bank. They will announce their interest rate decision as well, and followed by the BOE. So BOE will also announce their interest rate decision. But for me, I would say these two central banks also will very likely to keep the interest rate level unchanged. One thing is their economic performance is not convincing, so it's not allowed them to continue to raise the interest rate, especially for the European Central Bank, because we know now the Euro CPI is actually lower than the US CPI. So they are really successful in taming down, in tear down the inflation rate. So I don't think the ECB will raise any further interest rate. I think they were just happy with this current level and just see the inflation rate slowly to go down. And yep, but BOE is still high. I mean the UK inflation is still high. But the latest economic data from UK came downbeat. It came lower than what the market expected. So I don't think the BOE dare to lifting up the interest rate level as well. So yeah, I would think there will still I think the impact on the decision, I mean the interest rate decision will be very minimal. Okay. But I do want to highlight some of other key economic event, the which is the US retail sales number. I think the retail sales number is also very important to watch out because it will have a very direct impact. I think it will be impactful on the dollar index as well as the job data, which is the initial jobless claim. Because we know the NFP came very strong, okay, and then also the unemployment rate came better than expected. So if the initial jobless claim also came lower than expected, it means that the job market is very tight, is very robust in the US. So it will lead to more hawkish federal monetary policy next year in January maybe. So please keep an eye on it. And the next one will be the UK CPI, because UK CPI, if you compare amongst other major economy, it is like I think it is the highest now at the moment, which is 4.6%. And of course, they're still sharing the same target inflation rate, which is at 2%. So this is still a long distance away from achieving it. So if the CPI came, but I think this is my own analysis, I think UK CPI will come lower than what the previous reading. So it will harm the trend of the cable. I mean the GBP USD. So yep, please watch out with this. You can note down. So before I go to Q&A session, I do like to share this Christmas event, Christmas promo with you guys. Prime have launched this Christmas promo. So this is like a in-app promo. You have to use the apps. So you can you can go through and also ask your account manager. So you can, I think there's like a task for you to complete. Once you complete, you can play with this wheel and you can get credit bonus, you can get trade loss voucher, and you can get points. What's the points for? If you have actually a ranking. So if you are you have the highest point, you are like a top one, you can actually get away a $1,000 cash. This is cash, which is that you can really like withdraw. So okay, and also the detail, I cannot remember the detail, so you can also refer back to our website. You can go to the promo section, or you can ask details from your account manager. So I think they are more than happy to answer all your questions. Okay, this is my sharing. Thanks you guys, and I will just get some now. I'll just open for the Q&A and get some questions from you guys. From an anonymous, what is the major focus of FOMC? I think I have already answered this. So I think the focus is not on the interest rate decision, but you can pay more attention on what's the Jerome Powell is going to say later. So whether or not he will give an insight of the upcoming monetary policy move from the Federal Reserve, that will be very helpful for you to analyze and make an analysis for the upcoming the future dollar index price movement. Any other questions, guys? Thank you, Nitesh. I hope I read your name correctly. Thank you for your support. well, I welcomes all the questions. So if I can answer you, I can answer. Yep. So you can, reconsider, make your own analysis, and before you actually open your position. Yeah. My analysis is I have a bullish bias on the DXY. Okay. But of course, at the same time, please, do your risk management very, very well. For Ollie questions, we will have a webinar on next Wednesday, and I think we will just fully address all your questions there because you have a very long questions. So please come join us. I'll get prepared, and my colleague will actually address this because this is the topics that we will discuss in next webinar, which is on next Wednesday. So please join us next Wednesday. Question from Sandra: what is your prediction on gold again, please? So because I have a bullish bias on the DXY, on the dollar index, so my bias is I think the gold will just gradually going down. So the next TP for me will be at 1966. So if break below this, the next one will definitely go to 1933. This is my view on the gold price because at the moment there's still no very convincing, very big catalyst to actually push the gold price higher. From questions from Akin Kumi, can you use DXY to trade any dollars pair? Yes, definitely. I always look at the DXY and then also trade with other pairing, especially the euro, because DXY consists like nearly half, I think more than half of a percent. The weightage is against the euro. So normally I will just refer back to the DXY. I just assess the strength of the dollar and then I apply it on other pairing. Of course, I will also do a separate analysis on each of the pairing before I actually open a position. From Jason Sanga, do Feds also trade? I'm not sure. I don't know any top rank, top bars from the Federal Reserve. I don't know any like senior officer from Federal Reserve, but maybe I don't know. Maybe they do trade or they are the people that they know trades. If you know, if you can find out this question and this answer, please let me know as well. From Lalu Ahmad, bought China A50 from the major support. Yeah, you guys, if you guys are interested, you guys can also keep an eye on the China F50 as well as HSI because they are now trading in the extreme bearish momentum. Just like there's like no tomorrow, there's like no lights at the end of the tunnel, just pushing down. So yeah, you guys, if you guys are interested, you can also give an eye on the China F50 as well as the HSI, the Hang Seng Index. It's also a very interesting things to trade now because the trend is kind of obvious. Yep. Ahmad's Kabas, they trade secretly. Yeah, I bet they do so. Yeah, someone really speak for us from Ollie. Feds cannot trade due to compliance, conflict of interest. Yeah, if they really abide the rules of law. Okay, yes, so I guess we come to an end of our webinar for today. So I hope that you guys make profit later on if you guys are trading later, trade on news. But once again, let me remind you guys, please do your risk management very, very well and be disciplined on your TP and stop loss level. Okay, thank you once again. Thank you guys for your support, and please join us next Wednesday. We will discuss more interesting topics with you guys. Thank you. Bye bye.